Hey guys, welcome to They Take Finance, and in this video we would be talking about the animals, but not in the jungle, in the stock market. So let's get started with this interesting video and understand how these animals depicts the characteristics of various investors in the stock market. Let's start with our first animal, that is bull in the stock market. So a bull represents the rise or expected high rise in the prices of securities. It represents the optimism of the market. So when the stock market is doing well with the rise in the prices, or even if the stock market is expected to do well because of the favorable market condition, favorable economic condition, so for a particular period of time, for a stable period of time, so that is what bull represents. It represents an optimism, a high rise moving upward trend in the stock market. And somewhat it is related to the characteristic of a bull as an animal because it is known for thrusting up its horn into the air full speed, and thus it indicates a steep rise in the prices. And this is why it has been used as a metaphor to show the action of the market. So you can use this bull word either to represent the investors' characteristics who believe that the stock market is going to rise high in the prices and they invest, or it could represent a market condition in which the stock market prices are doing well and because of this favorable market conditions. Let's have a look at another animal, which is bear in the stock market. It is exactly opposite to the bull. It represents the decline or expected decline in the prices of securities for a particular period of time. So, when the market conditions are unfavorable and it is expected that the stock prices would decline, or if the stock prices are actually declining for a particular period of time and it is like moving in the same pattern, it is going on declining for a consistent period of time, so that is what a bear represents. It represents more of pessimism. It represents when the market is doing bad and going with lower prices for a particular duration. Thus it shows the downward trend in the stock prices. And why this animal has been used to represent this kind of market condition? Because it signifies the characteristic of a bear to swipe down to its prey. Let's have a look at the bird in the stock market, and this one is chicken. So chicken refers to those investors who are risk averse and do not like to take much risk in investment. This is somehow related to the characteristic of chicken because chickens are believed to be scary and fearful, and this is what is depicting the investor's characteristic because these investors do not try taking risk to gain higher prices, higher interest rates. Rather, they believe in sticking to their own current portfolios in which they feel more safer without making any changes with the market scenario, with the changing dynamic market scenario of the stock market. These investors usually invest in the conservative instruments like the government bonds, the government securities, and then the fixed deposits because there they know that risk is very less and thus their money would be safe. Even if they are not going to earn high, they would be earning some interest rates and would be at a safer side of the market. Let's have a look at another animal, that is pig in the stock market. So this is exactly opposite to the chickens in the stock market. As the chickens were representing the investors who are risk averse and do not like to take much risk, pigs are greedy and these are the high risk investors. They want to have the maximum benefits in the shortest possible time. It represents the characteristic of pigs who are trying to consume all the things available irrespective of the situation where that is required or not required, just to have maximum portion with them. And this is somehow representing the characteristic of investors of being impatient. And these are the investors who lose drastically. If the situation is going well, they would be okay. But if the situation goes unfavorable, if the situation goes bad, the economic condition goes bad, these are the investors who lose drastically, and thus they are more on the risky side because they are taking high risk and wanted to make higher benefits in shortest possible time. Let's see another bird in the stock market, and this one is hawk in the stock market. So hawks are generally the policy makers. More here we would be talking about the economic policies. So these are the policy makers who believe in keeping the interest rates high to have a control over the inflation, because the inflation is believed to occur when there is more demand and the production is limited. So because of the higher demand and limited production, what would happen, the product prices would increase, and the increased product prices would give a rise to the inflation. Now if we want to control the inflation, these policymakers believe in raising the interest rates, because raising interest rates would help in controlling the money supply. If the interest rate would be high, people would borrow less, and thus they would be having less money with them to spend, and thus the demand would be less, and automatically the inflation would be controlled. So hawks in the stock market represent exactly the same. Let's see just opposite of it. This bird is dove in the stock market. So these depicts the passive and peaceful nature in financial market. It represents to those investors who do not prefer in making any harsh changes to keep a control over the inflation. They believe in a loosened monetary policy by lowering the interest rate. They more believe in the convenience and don't like to take any stronger action, to take any aggressive action to make any changes in the market. So these are the doves. Let's see another animal, the wolves in the stock market. So wolves are those investors who make money unethically. They are expert and powerful traders because of they are having knowledge, a good knowledge of the market conditions. They know how to speculate on the market and how to get benefited from the market. But usually they go in a wrong way by using unethical means to grab the opportunity by cheating, by doing unethical ways of investing. So wolves thus represent the unethical investors who try to make money using their expertise, using their knowledge, but in a wrong way. And most of the time, these wolves are involved behind all of the scams that affects the share market negatively, and affects the basic integrity of the stock market. Let's have a look at another word, that is ostrich in the stock market. So ostrich investors are those who fail to react in adverse situation. And why this word has been used, because ostriches are usually believed to bury their heads in the sand when the danger comes. They believe that if they are not seeing the danger, it would just pass and they would be safe when once the danger has been passed. So these are exactly depicting the characteristic of those investors who fail to react in the adverse situation. If the economy is not going well, if the stock market is likely to go unfavorable, the situation is going bad, these investors, what they do nothing with their portfolio in such a threatening market situation. They just try to ignore. And why do they ignore? They hope that these situations would just pass on and they would come out safely through this phase. So this is what ostrich investors are representing in the stock market. Let's see the dead cat in the stock market. So it is usually about the dead cat bounce, because cats are believed that even a dead cat will bounce if it falls from a great height. So that doesn't mean that the cat is alive. So this is used as metaphor to show the condition of the stock market when the prices are declining and suddenly a small rise in the price occurs, but that rise in the price doesn't show the upward movement, because it is again believed to be decline in the same manner. So the price fails to continue upward and instead falls again downwards. So this is what we represent, the dead cat bounce in the stock market. So many a times what happens, the prices are goes on declining and suddenly a rise happens, and many investors feel now the prices would go on rising, but that doesn't happen, because that was just a dead cat bounce and the prices again goes on declining for a longer period of time. Let's have a look at the ship in the stock market. So ships are the investors who lack the decision-making ability, and this animal has been used perfectly to show the characteristic of those investors because ships are believed to be a follower, to follow their herd irrespective of their decision-making ability. So these investors are exactly the same because they are having lack of the knowledge about the stock market, they are having not so much of experience, and they are unable to make a proper analysis of the market trading, and that's why they depend on the suggestions from around, which is not so reliable, unreliable suggestions which could lead to dangerous situations in the stock market. So they would go for suggestions from friends, families and all, and would make their investment decision based on that. So these investors could lose a lot in the stock market because they are not making a proper analysis, they are not dependent on any reliable advice, rather they are going for suggestions from the people who are not having much knowledge about the stock market. Let's see the stag in the stock market. So stags are short-term spectators. They buy and sell stocks very quickly, usually within just a few hours of the day. So these are also those investors who want to have the maximum benefit in the shortest period of time. But they are having expertise in the market. They make technical analysis, keep a proper speculation on the market trading movements, and thus they take decisions of buying or selling of the shares to gain benefits. They are just opposite of those people who believe that holding shares for a longer period of time would give them the maximum benefit. Rather, these investors believe that the more the trading in the stock market, more would be the benefit. So frequent buying and selling would give the maximum benefit, would provide maximum profit. So these were some of the animals in the stock market. I hope you like the video. Do like and share my videos. Subscribe to my channel, Dev Take Finance, and thank you for watching. Thank you all.